Good day, ladies and gentlemen. Today out of Toronto, we are still here. PDAC 2015 is going on, and now I have the honor and pleasure to talk to Keith Neumeyer. He is the president and CEO of First Majestic Silver. You remember the very successful silver company producing silver out of 5 mines in Mexico. Keith, thank you very much for taking the time.
Oh, thank you.
How's it going with the PDAC? Are you satisfied?
You know, for us, it's a great time to see most of our shareholders. We have a lot of shareholders here in Toronto, and we go to the brokerage firms and do desk presentations and so on. We don't really spend a lot of time at the conference itself.
Yeah. So very busy with the big boys.
That's right. Well,
you have to, of course. Let's come to your terrific company. You are, one of the most successful stories in the last, I would say, 5 to 8 to 10 years, whatever. And you did very well, and you still do very well. You produce out of 5 mines silver in Mexico, very successful still. Can you comment a little bit on the year 2014 as you just brought out your numbers, and then maybe we talk about 2015?
Yeah, sure, absolutely. Both 2013 and 2014 were tough years. No one expected the floor to fall out of the silver price the way it did, and these mid-tier mining companies like ourselves, these are big ships, and they don't just turn on a dime. So when you're in full-blown investment mode, constructing operations, doing exploration, doing development, and all of a sudden you have to stop all that. It takes time to take those costs out of the system. And so we ran the business for a couple of quarters losing money, unfortunately, because the silver price is just dropping too quickly. We just couldn't drop our costs. Finally, in Q4, we pulled off a tremendous quarter. In Q4, record production quarter, 4.2 million ounces in one quarter. Also, our cash cost dropped from $19 previously, all in, this is all in numbers, to $14.50.
Wow, that's a big drop.
Yeah, all in. And then 2015, we're going to see even a further improvement. We're projecting $13.50 to $14.50
fantastic.
In 2015, yeah.
Through what measurements or through what measures you want to achieve that you come down to, let's say, below the $14?
I mean, how are we doing it?
Yeah, how?
Yeah, quite honestly, the mining sector, a lot of the costs that came into the mining sector was a result of availability of personnel and equipment. So for a mining company who wanted to do a 2-kilometer tunnel, for example, you'd phone up the equipment manufacturer like a Sandvik, and you say, can sell me 3 scoop trams, and they would laugh at you.
Really?
They'd say, oh yeah, like you wait 12 months, 24 months.
So stand in the queue.
Yeah, absolutely. And so, but you wanted to build this tunnel.
Yeah, of course.
So you would have to contract that work out. So the contractor, entrepreneurs, of course, will charge whatever they can to the poor mining company. Yeah. So our development costs over time just kept going up and up and up and up. And development is one of our actually is our largest cost. Development. So development costs went up 300% over a period of
my goodness.
A couple of years. They went from $600 a meter to $1,800 a meter. It's now dropped in 2014, average to $1,300 a meter. We're expecting that's going to be $1,100 a meter in 2015. So that's taking millions of dollars worth of costs out of our operating budgets. And so that's the biggest cost driver, just eliminating these contractors and bringing all that work in-house. So because we can now phone up Sandvik and we can have a scoop tram on our door in a week.
Wow, that's pretty quick.
Oh, absolutely.
Compared to the 12 months.
Yeah, they have them in Mexico sitting there ready for delivery. So, we need a piece of equipment, it's easy. So it's just a matter of us having the in-house talent. We don't have those bottlenecks anymore. So that's taken a lot of costs out of the business. And also, chemical prices are dropping a lot, due to the oil sector. And we've also been laying off a lot of people, unfortunately, looking for efficiencies. We've been automating mills and bringing in new processes and putting belt speed monitors, pH controls, lime feed automation systems, and all kinds of different things. And our workforce has gone from 4,900 people in early 2013 to the current 3,700 people.
Okay, so that's nearly 20% off.
Yeah. So big
wow,
drop.
that's a lot. Yeah. Are you also cutting on exploration?
Oh, of course. Our exploration budget, should be $25 million. And this year it's $8.5 million. So
that's a
you know,
cut,
so yeah, so really what we're doing with our $8.5 million in exploration costs is just adding, or not adding, we're just keeping our ounces that we mine. So we're not, you know, we're not adding to our numbers.
Okay, so you're just replacing.
Just replacing.
What is still in the reserve category?
Well, total resources, I'd have to, because we're restating all those numbers in the next 30 days. The reserves are something around 150 million ounces.
There's still a lot to produce, I would say.
Oh yeah, no, every mine is 10-year mine life.
Yeah, okay.
Yeah, so-
Yeah, but then
so-
it's easier for you, because I think if you would only replace by now and you have maybe some 2 or 3 years mine life, you could be in trouble if the prices stay low.
True.
Yeah.
Yeah.
So you're still in good shape, I mean.
I think so. Yeah, and we want lots of life in these mines. It's interesting. You know, when silver was at $40, you know, you could mine 100-gram material and then make money doing it.
Yeah.
And that 100-gram material wasn't in our reserves, right? Because it was too low grade to be included in the reserves, because the reserve number was done at a higher price, right?
Yeah.
So, but now we can't mine the 100-gram material. But later in the future, you know, when silver prices do improve, we can go back.
Yeah. I know we have met some weeks ago in Zurich, and we were talking about silver prices. Just maybe a little bit an opinion. What do you think? What could happen, or what is in the market going on?
Well, you know, if you don't mind me saying a couple of things about that. First off, you know, there's really no silver companies left. It's interesting because, you know, Pan American, Coeur d'Alene, you know, Silver Wheaton recently, Silver Standard, now also Tahoe recently. They're all becoming gold companies, and so, you know, First Majestic is really the sole standing soldier in the silver sector, which is, I find it quite fascinating. It's hurt us, mind you, because silver has underperformed gold quite a lot. So our share price has been under more pressure than their share prices because they have a large gold component. So it has helped them to some degree, but if my thesis is correct that we do see triple-digit silver, you know, over the next 3 to 5 years, I believe that there will be a rush into the silver sector, and First Majestic will be the primary recipient of that move into the sector, because we'll be the only real pure silver play in the world. So,
Absolutely, yeah.
yeah.
Yeah, and I can imagine with $100 silver, for example, or 150 even, and you still would have your nice cost structure. That's one of the biggest call options on silver, your company.
Yeah.
Without a banking risk.
That's right. That's right. And you know, we've got the metal in the ground,
Yeah.
and we've got the talented people, and the costs are in good shape now. And you know, I think the mining sector, I think, has learned a little bit as well. I don't think that you know, as the metal prices increase over time, I think, you know, we'll be a lot more restrained, you know, in allowing costs to get out of control like they did.
Last question: what is the let's say the main target you want to achieve in 2015?
Cost reduction. It has to
Definitely.
be. You know, treasury growth, which is related, obviously. You know, I want to see treasury growth because I want to start building more mines. I want to keep building this business, and I don't want to go back to the public markets to raise equity through financings. I want to use our own cash generated from our current production to keep building the business. And the way we can, and if we're not going to see higher silver prices in the short term, which, you know, that's questionable whether we will or we won't, but we have to learn to be profitable on a consistent basis, you know, in the current environment for prices. And once we start seeing treasury growth consistently quarter over quarter, which is our primary goal and objective, then we can start reinvesting and start building the business.
Definitely. Well, Keith, thank you very much. All the best on that, and keep fingers crossed that you achieve it. I'm sure you achieve it, because you normally achieve all the time the things you want to do.
We try hard.
Yeah, so good luck for that. Thank you very much.
Thank you very much.
Ladies and gentlemen, it was Keith Neumeyer, the CEO and the president and CEO, actually, of First Majestic Silver Belt. You heard it. Costs are going down. In the fourth quarter, they achieved the $14, and for this year, they want to go below the $14 all in. So still making money, even in a price environment above $16 or $17, and it looks quite good. They have 150 million ounces still in the resource and reserves, and so 10-year mine life is still walking on. And for 2050, we are pretty optimistic, and the best thing, what I like what he just said, is triple digits in silver in 3 to 5 years. We see it the same way. Thanks, and bye-bye from Toronto.
Thank you.